Good morning. Ladies and gentlemen, I am Pelshia, moderator for this conference. Welcome to the conference call of RITES Ltd to discuss its Q4 FY'25 and FY'25 results. We have with us today Sri Rahul Mittal, Chairman and Managing Director, Dr. Deepak Tripathi, Director Technical and Director Projects, Additional Charge, and Sri Krishna Gopal Agarwal, Director Finance and Chief Financial Officer. At this moment, all participants are in the listen-only mode. Later, we will conduct a question and answer session. At that time, if you have a question, please press star and 1 on your telephone keypad. Please note this conference is being recorded. In the interest of time and fairness to all participants, you are requested to restrict yourself to one question per participant. Time permits, you may come back in the question queue. I would now like to hand over the floor to Sri Rahul Mittal, Chairman and Managing Director, RITES Ltd. Thank you, and over to you, sir.
So, morning everyone. To begin with, let me give you the safe harbor statement. The presentation and press release which we uploaded on our website yesterday and discussion during the call today may have some forward-looking statements. These statements are considering the environment we see as of today and obviously carry a risk in terms of uncertainty, because of which the actual results could be different, and we do not undertake to update those statements periodically. So with that, let me give you a brief overview of the performance in quarter 4 and the FY overall. You see, the performance in Q4 is in line with our two-pronged business focus strategy of improved execution and aggressive order inflow. If you recall, at the end of quarter 3, we had given a guidance that we'll make all-out efforts in quarter 4 to try and peg back and come as closer to as possible to FY'23-24, and we'll try and get the revenue dip to below 10%, profits dip to below 20%. The operational efficiency and the focused approach in Q4 helped us achieve on an overall at the end of the FY dip in revenue of 8% and PAT dip in 14%. Further, the aggressive order inflow, we maintained the strike rate of more than one order a day, the strike rate of one export order a quarter. We got more than 150 plus orders totaling to 1400 crores in Q4 and ending the FY with an all-time high order book of nearly 9,000 crore, 8,900 crores. So that in a nutshell is the performance of Q4 and the FY in total. I leave the floor open for questions now.
Thank you. Now we begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad. In the interest of time and fairness to all participants, you are requested to restrict yourself to one question per participant. Time permits, you may join back the queue. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. We will wait for a moment while the question queue assembles. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. The first question comes from Anand Bhaskaran from Kisima Wealth Private Limited. Please go ahead.
Good morning, can you hear me?
Yeah, morning Anand, go ahead.
Yeah, so regarding your export book, as per the previous for Q3, you mentioned that some of the orders like the supply of 10 locomotives to Mozambique and supply of 200 number of broad gauge coaches that will be completed in 2029, but the realization will come in the next quarter of FY'26. Is that still on the plan, or is it still delayed?
No, I didn't get your question. You see, let me again clarify. There are two orders. One is 10 locomotives to Mozambique and 200 coaches to Bangladesh. What we had said in Q3 is that starting this FY, that is FY'25-26, the deliveries will start, and aiming at least that from Q1 latest or beginning of Q2, both these deliveries, the locomotives will start and the coaches will start from the balance, from the latter part of the FY, and that's still on track.
Okay, that's still on track. So deliveries will happen, but you also mentioned the realization will start taking place within Q1 as well.
Yeah, so the way it works in export orders is that, number one, the realization takes place of revenue only when the actual bill of lading is made at the ports. So even if the product is ready, it is shipped, and the day it is shipped, we get the revenue. So that is still on track. As I said, we are aiming to maybe latest by end of Q1 or early Q2, the locomotives delivery will start, out of the 10 part deliveries will start, because there has to be a minimum number of quantity, which is also, then you get the berths in the shipping, in the ship. And the coaches we are aiming by latter part of the FY, out of the 200 coaches, some basic initial lots of coaches will start deliveries.
Okay, thank you. And you also mentioned the revenue guidance and the top line and bottom line guidance for next year also. But do you have a sense of what will be the revenue mix for the FY'26?
Yeah, so I'll answer this question, but I'll request you that as I said at the outset, we'll answer one question at a time. You can come back in the queue, but this being the first question, I'll answer that. You see, as we said at the end of Q3, and we maintain that also at the end of the FY, that having now completed the FY with the highest ever order book of nearing 9,000 crore, 8,900 crores, we are aspiring to reach the highest ever revenue, reach the record of highest ever revenue in the coming FY, and then we are aiming to get about 20% growth in the top line and commensurate growth in the bottom line. And that guidance which we are aiming for at the end of Q3, that gets substantiated. We are still on track on the same guidance in view of the continued order book inflow in Q4, as well as the operational efficiency which we demonstrated in Q4. Okay, what will be the expected revenue mix?
I'm
sorry, you'll have to come back in a queue, Anand, for the next question.
Mr. Anand, can you join back the queue? Yes. We are requested to restrict yourself to one question per participant. The next question is from Nimesh Sundar from Elara Capital. Please go ahead.
Yeah, thank you for the opportunity, sir. Am I audible?
Yeah, go ahead. Morning.
Yeah, so congratulations on a very good set of numbers during the quarter. So margins saw really impressive rise during this quarter, so around 30%. So how would be this run rate going forward on a sustainable basis with exports kicking in from FY'26?
Yeah, morning. You see, the margins in Q4, I would not advise you to see them in isolation. The margins, if you see on an overall FY, give you the real picture. And in overall FY, the EBITDA margins are at about 23% and the PAT margins are at about 18%. And moving forward, as you see the split in our order book, more and more it is tending every passing quarter to have more orders on the competitive basis. And as the higher margin orders start reaching their completion, moving forward, as I have been indicating in the previous quarters also, on an overall FY basis, we feel that the expected range of EBITDA margin would be about 20% and PAT margins would be about 15 to 16%.
Okay, thank you, sir. I'll get back in the queue.
Thank you.
Thank you. The next question comes from Uttam Kumar Semal from Axis Securities Limited. Please go ahead.
Yes, sir. Very good morning, and thanks for the opportunity. Sir, currently, now our export order now stands at 1,360 crores. So how much execution we see in FY'26?
Yeah, morning, Uttam. So the bulk of these the two orders which make the bulk of these 1,360, one is the Mozambique order, as I said sometime back, about 10 locomotives and 200 coaches from Bangladesh. The locomotives delivery we are aiming to start by, as I said, definitely by end of Q1 or early Q2. The coaches, the designs are getting finalized and prototypes. So there are about 5 types of coaches. The prototypes manufacture will start, and we are aiming to start delivery by latter part of the year. So let's see. I mean, we would, both our clients, both the Bangladesh coaches and the Mozambique locomotive, both our clients want that, irrespective of the contractual large delivery period, they want it as early as possible. We are also keen. So let's see how it pans out in these coming months. But we would try and maximize the revenue out of these two orders in this FY. So it will be too premature right now to peg a number. I can only say that out of the 10 locomotives, we will try and give maximum number of locomotives, try and achieve at least about 70, minimum 80% of the order. And coaches, as I said, the designs are getting finalized, and as the delivery starts by latter part of the FY, we see in the coming months how much we can expedite it.
Okay, thanks a lot. I will come back on this.
Thank you.
Thank you. The next question comes from Shreyansh Mehta from Equirus Securities. Please go ahead.
Yes, sir. So congratulations on the great sets of number. So my first question is on margin. So as you said that this quarter we have noticeably higher margin. So is it sustainable in the long term, or we can have a that you guided for the 20% margin for the
morning.
27?
Yeah, morning, sir. Yes, as I said, the margins viewed in a particular quarter 4 may not give a real, overall holistic picture. The margins which we have been preempting in my earlier guidances also, and as we see the order book that we have, the mix in the order book, as I said, most of these orders, both the export as well as domestic, are on very tough competitive margins. So we are aiming, and we would see that a realistic EBITDA margins on an overall FY basis would be in the range of about 20-odd%, and PAT margins would be about 15 to 16%. On a particular quarter, due to a certain change in the mix of inflow, you would see some ups and downs in the margin. But on an overall FY, in the coming FY 25-26, we would see, as I said, 20% and 15 to 16%.
Okay, sir. Got it. I will get back in the queue.
Thank you.
Thank you. The next question comes from Viraj Mithani from Jupiter Financial. Please go ahead.
Yeah. Good morning, sir, and congratulations on outstanding numbers.
Thank you. Thank you, Viraj. Good morning.
Sir, I just want to reconfirm. You are saying that we'll grow at 20% from this year, and the EBITDA margins would be in the range of 18% and PAT in the 15%. Is that correct?
Yeah. So just a correction, I said that we are aiming to grow in the top line of about 20%. The EBITDA margins would, we perceive, will settle down somewhere around about 20-odd%, and PAT margins about 15 to 16% in the coming FY.
Is it because of the more of the turnkey projects you've taken in this? When I see the composition of the order book, the turnkey is higher than any other other segment of us.
So it's not really because of. First of all, let me clarify. As I have said in repeated times earlier, also, we are a pure consultancy company. We are not a construction company. What you see as 4,200 crores in the as a turnkey in the order book, that's not really a construction, not like a EPC construction company. These are primarily, our role is still as a consultant, only thing the revenue passes through us. So instead of, let's say, a consultancy fee of 4 rupees, instead of the order value being 4 rupees, the order value is 104 rupees or 100 plus 4. So that's the only difference. Our work, our content, our scope of work is exactly the same. So we are not deviating from our core strength of being a consultancy company. Having said that, the impact in margins is primarily due to a mix of factors, and one of the key factors is the changing, if you see, compare our mix of order book every year in the last 2 to 3 years especially, the shift now is a majority on the competitive basis and on the nomination, vis-a-vis the nomination basis. And even the orders which are on nomination basis, I wouldn't really call them nomination. They are primarily kind of more or less single tender kind of orders given to us more because of our capability and experience, where it is based on a very tough negotiation on deciding the rates, etc. So with all those factors and the competition around, that's contributing by and large to the margins. So the erstwhile margins which have been there 3 to 4 years back are not possible to be achieved, and that was what makes us feel that we will be in the range of about 20% in EBITDA and about 15 to 16% in PAT margins.
It's in connection with the same question, that we maintain the same dividend policy, is it?
Mr. Viraj, can you join
Pardon
us?
me?
Thank you.
It's connection to the same question, we'll maintain the same dividend policy, correct?
The same? Dividend
policy.
Okay. Dividend, yes. Dividend, as you've been saying, as you've been seeing, our dividend payout ratio in 23-24 overall was 95.2%. In 24-25, we maintained that level. We are about 95.4%. So with that, we are assuring that because our business model, as we have been very firmly, unequivocally saying in the last 1 or 2 years, we are a low capex company. We are not going to give you any surprises. Our business model remains. We are a consultancy company. So the dividend payout ratios will be appreciably in the same trend.
Okay. Thank you, sir. Join the question.
Thank you.
Thank you. Dear participants, you are requested to restrict yourself to 1 question per participant. Next question comes from Parimal Mithani from Credential Investments. Please go ahead.
Good morning, sir, and congratulations for a good set of numbers.
Morning, Parimal. Thank you.
Second, the question relates to consultancy business. So if you see over a period of time, you highlighted earlier also, we are shifting more towards the competitive bidding landscape. Is it fair to assume that, sir? And
yes.
Will we be able to achieve consultancy revenues of 1,200 odd crores, which we had a couple of years back in this landscape, so back? If you can highlight that.
Yes. So, as you correctly said, pointed out, the overall trend in all consultancy across all areas of infrastructure, 13 odd verticals, are shifting, and both domestic and international are shifting to competitive mode. And that's why, however, if you see the growth in actual consultancy revenue, even if you see sequentially, there has been a substantial growth. YOY, if you see in Q4, there has been a growth of 11%. And as these recent orders in the last 2-3 quarters which we have received, as they start generating revenue in the coming quarters, both in terms of fresh inflow of consultancy orders as well as revenue coming from execution of these orders received in the last FY, you will continue to see a growth in consultancy. So, consultancy being our core bread and butter strength, we will continue to grow both in terms of order inflow, domestic and international, as well as revenue realization from the order book.
And so, follow up to that question, can you highlight your the update on the RITES and DMV JV in terms of assurance business? If you can highlight how it is going through, which we had.
RITES and who's JV? I didn't get you.
DNB Consultancy, sir, which you were with a Norway-based company for quality assurance.
Yes. So we have, you see, as we have diversified in our QA business in the last 1.5 years, we are partnering with a number of QA entities, both domestic and international, and that is why if you see the QA business, in fact, of a huge hit this year, the hit of QA business to our revenue and profit both combined have been in the range of about 40 to 50 crores, which is a huge hit. And so the ratio in this FY, this was the first FY where this diversification of taking on fresh clients has really borne fruit due to these various partnerships. Both in the competitive mode, we started getting our first international consultancy order in Sri Lanka Railway, and today our diversified QA inspection vertical is taking on orders, has got a majority now of about 55 to 60% of non-railway QA business also. So as the pie expands, the ratio also in diversification is expanding. And these partnerships are not only this, but other partnerships also that we've done in QA has helped us in this diversification.
So it's safe to assume the QA
I think you can come back in the queue for it.
Parimal, can you join back the queue?
So just a follow-up, sir.
No, please, I think it's better that you come back. Thank you.
Thank you. The next question comes from Abhishek Taparia from MK Global Financial Services Limited. Please go ahead. I repeat, next question comes from Abhishek Taparia from MK Global. Please go ahead. There is no response. We have a follow-up question from Anand Bhaskaran from Gesima Wealth Private Limited. Please go ahead.
Yes, sir. Good morning again. So I just want to ask about what will be the revenue mix for the upcoming financial year? What do you think would be shared?
So, Anand, it would be safe to say if you see the order book mix, so if you see as I mentioned, the export orders, we are definitely aiming to maximize the 1350 out of that, the maximum we can get. The consultancy, which is a healthy 3,000 crore, and even the turnkey, which is 4,200 crores, as I explained, these are primarily consultancy itself, except the method of accounting. So the primarily the export will bounce back after a gap of nearly 2 years. This year the export revenue was nil. Last year is about 100 crores. So these 2 years which we have taken a hit, export you will see a bigger contribution in both in top line and bottom line. And consultancy and turnkey will continue to see a growth that has already seen a sequential growth, a healthy growth Q3 to Q4. YOY Q4 has shown about a 11% growth in consultancy revenue.
So you mentioned that, okay, consultancy and turnkey projects will relatively maintain the same amount of order book growth.
Yes, sure.
Yeah. Okay, and
So Anand, can you join back the queue?
Yeah, sure. Thank you.
Thank you. We have a follow-up question from Shreyans Mehta from Equirus Securities. Please go ahead.
Yes, sir. So my next question is on the export orders. So can you share the value of the export orders where we are currently L1 but yet to be converted into the company's book? And also any guidance on the new export orders inflow expected in the FY'26? And what revenue we are targeting from the export orders as we have nearly 1,300 crores as on date.
So as far as L1 is concerned, we will declare it at the minute we are L1. We don't like to speculate for works in progress. We are engaging in a number of bids for export. Only one old agreement which is not included in our order book, which we signed about 2 years back with the National Railway of Zimbabwe for wagons and locomotives. That is yet to be converted into an order because they are still waiting for a funding confirmation which they are trying. So that's as far as the order book of export is concerned. In terms of realization, as I explained, the locomotives order of 10 locomotives to Mozambique, which is totaling to about 300 crores. The deliveries will start in the next few months, as I said, maybe end of quarter one or beginning quarter two. And we aim to, as I said, maximize out of these in this coming FY. It's too early right now to predict an exact number. I can only say that we are trying to maximize the out of all of these, the entire order. The coaches 200, which is again a huge order of about 900 crores. The designs are under final approval. There are 5 types of design with Bangladesh Railway, and we will aim to get the prototype manufacture and get it approved and start deliveries by latter part of the FY. So in the coming few months, in terms of exact numbers, more clarity will emerge, but safe to say that this is the first year after a gap of nearly 2 years where you see a substantial contribution of export revenue in both top and bottom line.
Yes, sir. Thank you. Sir, just you can...
can you join back the queue, please?
Just follow-up question.
Okay, go ahead, Shen. Yep.
Yeah, just you can quantify the export or new export orders, what we can expect in this financial year.
So again, that is speculative, right? As I said, we have maintained in the last 5 quarters successively the aspirational target that we had said for 1 export order a quarter. We will try and continue to maintain that. The exact details will be speculative at this stage.
Sure. Thank you, sir. Got it.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. You are requested to restrict yourself to 1 question per participant. Next question comes from Gaurav Jagirdar, an individual investor. Please go ahead.
Good morning, sir.
Morning.
I have 1 question. Can you shed some light on consultancy scenario, the present orders, what is the quantum, and how does the future looks like? Thank you.
Yes. So you see, our biggest strength in consultancy is that we, both domestic and international, we are tackling all areas of infrastructure except oil and natural gas. So if you see, give you a flavor of the type of orders which we got in the last few months in quarter 4. So whether it is rail infra orders, whether it is study of new high-speed corridors, the feasibility studies, the DPRs, whether it is study for sidings by various, whether it's an oil company or whether it is a mineral company, whether it is DPRs for Jaipur Metro, whether it is orders for leasing of locomotives, whether it is the orders for operation and maintenance of the mini rail systems that we run for the various PSUs. So you see a mix of all these orders across, whether it is building consultancy orders, third-party highway, large number of highway third-party and safety and quality inspections. We have got orders across states, including Northeast. So whether it is bridges, tunnels, highways, or all areas of infrastructure, we continue to get orders and maintaining this strike rate of more than 1 or literally more than 1 order a day. As I said, quarter 4 we got 150 plus orders. We will continue to get orders in consultancy in the coming FY.
That's really great. And what is this quantum of international orders as an absolute number, and any specific countries we are targeting we have in mind?
So in consultancy, we have today an export order book of about 1350 crores and a consultancy order book of about 400 crores, international consultancy. You will see in this FY, and that's our focus, that's the next milestone which we are trying to achieve, besides growth in export order book, definitely growth in the international consultancy order book. And whether it is the African continent, whether it is the Southeast Asian countries, whether it is Latin America, we are doing got a recent order of highway in Guyana, whether it is the Middle East countries, we've got an order in Jordan. So we are targeting these geographies and obviously aspiring to even go to some of the G7 countries to try and get international consultancy orders, building up on our strength.
That's really great to hear, sir. Thank you so much.
Thank you. The next question comes from Viraj Mithani from Jupiter Financial. Please go ahead.
Sir, my question is, since you have so many JVs with so many renowned companies in the world, can you give some color on that? What kind of orders or what kind of business we're getting from them?
So, you see, Viraj, our basic strategy, whether for domestic or international consultancy, is depending on the kind of sector, you cannot have all possible resources under one roof. That is not cost viable, and the complexities of the consultancy in various sectors require some skills to be complemented. So all of these, number one, none of these are JVs. These are all MOUs, Memorandums of Understanding for partnership and collaboration of supplementing each other's skills to take on opportunities. So for example, we've signed an MOU with Etihad Rail a few months back in UAE, and now we are empaneled with them, and we are getting some work. We started getting some work in Jordan. So this collaboration and partnership in supplementing, either working for them or joining them and working together with them for a third party opportunity, both kinds of MOUs exist.
Okay, sir. Okay. And so, you said about the quality.
Can you join back the queue, sir?
It's a follow-up question, ma'am. It's related to the same thing only. May I?
Okay, go ahead, Viraj.
You talked about JVs regarding, MOUs regarding quality assurance business. So
Yes.
Any color on that in terms of growth this year or number, will it be back? So that's one of the very big good business for us.
Yes, we have grown, and this sustained effort in this FY and this partnership has got us orders for ISA of Vande Bharat, which was in partnership with another company. We got an order. We are now, as I said, diversified in so many areas of quality assurance inspection, whether it is the solar area, whether it is other infrastructure, whether it is the state governments, whether it is vendor assessment for the GEM portal, whether it is for the National Solar Energy Initiative. So all these are initiatives which is helping us, these partnerships, these MOUs, and supplementing our skills with the skills of these partners has helped us grow, and we are confident that the way we have grown in this FY, we have feathered the hit by the QA business changed in dynamics, and by end of the coming FY, at least in terms of, we are aiming that to reach back the same levels of business in terms of QA.
Thanks, sir. Thank you and all the best.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. The next question comes from Parimal Mithani and Prudential Investments. Please go ahead.
Hello.
Yeah, go ahead, sir.
So I just wanted to know, in terms of your RAMC business, so what is the way ahead, if you can tell us?
Yes. So RMC has been as you're aware, doing two things. One is traction procurement, which has been growing in terms of because nearly 100% electrification and the growth in traffic. The second is the net zero initiative, which it is doing consultancy for Indian Railways, which also it is playing a huge role. So the growth in RMCL has been steady. There has been it has been paying us a huge amount of dividend to both Indian Railways and us. It's a subsidiary for us. So we got a good dividend for about 40 crores in this year. So I see the growth continuing, and what we are now doing in the last few quarters, and definitely you will see that coming forward in the coming FY. It's RMCL's skill in renewables, which has collected and accumulated in the last 10 to 11 years, to be able, it's already started doing consultancy work in the renewable sector and started getting orders, and those I see growing substantially in the coming FY.
Okay, sir. Thank you, and all the best, sir.
Thank you.
Thank you. Next question comes from Abhishek Taparia from Emkay Global Financial Services Limited. Please go ahead. I repeat, question comes from Abhishek Taparia. Please go ahead, sir. There is no response. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Next question comes from Uttam Kumar Srimal from Axis Securities Limited. Please go ahead.
Yes, sir. Thanks for the opportunity again. Sir, what would be our CapEx guidance for FY'26 and '27?
See, Uttam, we are a very low capex company by our business model, and the capex would be very minimal. It would be definitely not exceeding around about 50 to 75 odd crores. So definitely well below 100, I can say. Our resources are manpower, skilled manpower. So we don't really see changing. As I've been reiterating, our business model is very clear. We won't come up with any surprises. We continue to grow in our consultancy field, both domestic and international. So with that, I don't see any major shift in the trend of capex. In fact, it remained in the range of about 50 odd crores.
Okay, sir. Thanks a lot.
Thank you. The next question comes from Viraj Mithani from Jupiter Financial. Please go ahead.
Yes, sir. Sorry, but can you qualify this quality assurance business? Like, what kind of contribution would be there in this coming FY?
In terms of contribution, I would, in terms of the quantum which it has come up in terms of our consultancy business, I can only say that it is part of the total consultancy revenue, and we were down in 22-23. We took a hit of about 50% reduction. We have now come back to about 70-80% of the levels of quality assurance revenue which we had. Margins and contribution in terms of bottom line are definitely much lesser. We have taken a hit of about 40 to 50 crores in both the top and bottom line in this FY, which by the coming FY, as I mentioned, we will try and reach back the same levels of top line of in the QA business. Yes, margins being much lesser, the contributions from the bottom line in the quality assurance business will definitely take much more time to come back to those levels, and that can only be achieved as we go beyond the levels of top line on the erstwhile levels that we had in quality assurance.
Okay. Thank you, sir, and all the best.
Thank you.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. I repeat, ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. We have a follow-up question from Parimal Mithani from Credential Investments. Please go ahead.
Sir, regarding quality assurance, sorry once again, sir. I just
Yeah,
wanted
go
to
ahead.
know, is the worst over in terms of the consultancy business? And from here on, we should see margins being stable there, sir?
Yes, not only in the quality assurance business, which is a part of my consultancy revenue and the bottom line. As I said, 24-25 was a good year of settling down at the levels of margin, because this was the year where the huge shift took place in terms of the shift to a majority of the competitive orders, whether it is in quality assurance or all areas of consultancy. So what we see that moving forward, we will settle again, as a repeat, on overall margins of about 20% EBITDA and 15 to 16 PAT margins. And the consultancy margin, which contribute in this overall EBITDA and PAT margins, would also settle in the same range which we are seeing, primarily if you analyze the 3-4 quarters of this FY, to be able to settle it overall on 20 and 15.
Okay, sir. Thank you, sir. Thanks, sir. Thank you.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. We have a follow-up question from Anand Bhaskaran from Casima Wealth Private Limited. Please go ahead.
Yeah, I just want to know about the leasing side of the business. How is that going about, and what would be your expectations for the future?
Yes. So the good thing in leasing is that we are continuing to, target new clients, new areas. It has seen, and in spite of this sector, again, this is an area which is also now opening up to competition. Erstwhile, we used to be the only player. Now we are still the dominant player, but it has now opened up a large number of smaller players coming in. So you see a growth if you compare YOY FY to FY, a growth in the leasing revenue. However, the competition being more, the margins and profits are more or less flat. So what we are definitely targeting is, we have now reached a growth of about more than 20% in the number of locomotives that we have leased, which are owned by us and leased. We are also got huge number of orders from clients who are owning their locomotives, but giving us the wet lease to operate and maintain them. So moving forward, we will, while, as I said, this is one of the recent sectors which is opening up to competition, but the expertise and the experience which we have in that, I see a sustained growth. We being able to see a growth in that, at least in the top line, and not allowing the bottom line to go beyond the current levels.
Okay, thank you.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. We have a question from Deepak from RITES. Please go ahead. He withdrawn his question. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. As there are no further questions, I would like to hand over the call to the management for their closing comments.
Thank you. So at the end, I would like to just pinpoint, you see, some time back, we put some milestones for us. The first milestone was trying to become a one order a day company. We maintained that. We have maintained that in the last 4 quarters, and we will try and maintain that. The second milestone we put for ourselves was try to get 1 export order a quarter. We have maintained that in the last 5 quarters, and we achieve to maintain that. These two, we set ourselves a milestone to grow aggressively in our order book, and we have ended the FY with the highest ever order book at 8,900 crores. In fact, the last entire FY, we got more than 500 orders totaling to 5,500 crores, which is nearly equivalent to the closing order book of 31st March 24, which was 5,700 crores. So the third milestone of being, breaking a record of the highest ever order book, we have achieved. As we move forward, we have set ourselves 2 aspirational milestones of this FY, trying to reach and break the record of highest ever revenue. We will see how it pans out, but definitely this is some milestone which we are aspiring for. And moving forward in the coming FYs, also trying to break the record of being the highest ever profit. So we will not only maintain the 3 milestones that we have achieved, we'll try and maintain them in the coming quarters, but also aspire to achieve these 2 targets and milestones that we have set ourselves in the coming FYs. So thank you very much, and we and our entire team is committed, as I said, to maintain these milestones achieved and aspire to achieve these milestones which we have set for ourselves in the coming years, in the coming financial years, next year and the subsequent years. Thank you.
Thank you all for being a part of conference call. If you need any further information or clarification, please mail at investors@rites.com. Ladies and gentlemen, this concludes your conference for today. You may disconnect your lines now. Thank you and have a pleasant day.
Thank you.
Thank you, sir.
Thank you.